you go. There you go. There you go. Morning, mofos. It's Wednesday, March 13th. Let's go to YouTube and monetize this. And then I'm going to turn on my Do Not Disturb. No. YouTube Studio. YouTube content. Zephin and Joe, West Coasters. And Scott, I think you're a West Coaster too. Man. Zephin, it's funny. I often think of you. I got a message. Oh, let me know. I got to find a way that when you were in the same. Ooh. There is an 11 a.m. today. Hold on, I'm going to put this in. AM office hours with Jason. Let me see. Share. Copy. Hold on, I'm trying to think. There we go. Office hours. Okay. That's a good one to have. Because I can tell folks to go there. Okay. Ooh, Daddy just got paid. Nantucket's awesome. No, I often think of you, Zephin, because you're one of the OGs. And I remember you specifically when you first got TrendSpider. You asked me quite a few questions, I think. And trust me, there's no dumb question with TrendSpider. But I think I had 3 people yesterday who emailed me who have purchased TrendSpider, and they all said they were feeling semi-overwhelmed. And my guidance is, and you guys can correct me if I'm wrong, keep at it. Keep plugging away on TrendSpider. It gets easier as you develop your system and your process of working. Just because it's super hard in the beginning, specifically if you're not a chartist or somebody who's used charts before. That's where it gets tough. So I think of you often, Zephin. So. Oh, by the way, I'm going to be in Orlando in April. So, yeah, just. And I'm thinking, you often see these. It's funny because you often see these things on the internet about how much money people made on YouTube and stuff like that. I don't make money on YouTube. I'm an affiliate. I make money off of the TrendSpider and Seeking Alpha and stuff like that, and the newsletter. Those are the 3 largest sources of my income. And I was thinking, I probably should at some point do a video with how much money I make. Because listen, I'm 4 years into this now. 2 years next to 0. Because I didn't have an affiliate agreement other than TrendSpider. TrendSpider was the day one I had an affiliate agreement with them, and that's why I'm super loyal to that. They've been super supportive. Even when I started, calling their strategy tester a algorithm, I thought they were going to kill me, and I thought they were going to kick me off the platform. But they were like, no, that's great. That's people will understand it a little bit more because you say strategy tester, and I don't think anybody understands what it is, but it's an algorithm. It takes the emotion out of trades and kind of guides you towards, hey, we can do more. Wow. We took a leg down. Let's see. We're going to do some scans. just to get it out of the way, and I will tell you guys that I bought a shit ton of Apple yesterday. I think it was at 173.50, so I'm probably in the red a little bit now. But I bought a shit ton of Apple yesterday. We're talking a lot. Here is a strategy for TrendSpider users. This is Apple on a 1 hour chart. Provides a pretty good return over 4 years. So I always want to release this one, but Jason created it, optimized it. You know, let me see this Variance Explorer. Let's look at weekly, daily, and 90 minutes compute. I don't know how this max drawdown on 90 minutes, max drawdown on 4 hour, max drawdown on weekly, max drawdown on daily. Looks like the algorithm might work better on daily, on Apple specifically. Rue risk ratio. Daily seems to work better on Apple with the algorithm. I ain't changing my algorithm. So, let's say good morning, Cesar. J. Cesar. John. Q-Tip, good morning. Chris, good morning. Scott, good morning. What the hell is cake? I know I've heard of this one. Cheesecake. The portion size, Effin. East Coasters. I don't know. Does cheesecake ring a bell with East Coasters? I may buy NVIDIA and SMCI today. I liked the action yesterday, specifically on SMCI. I don't like the high MACD. I don't like the high RSI, but I may take the plunge again and just buy higher. I mean, you know, understand it's not about, for me in the retirement account, it's more about optimizing. You know, I have my buy and holds in the retirement account, but it's more about scans, not scabs. With those kinds of things, it's about protecting gains, and I don't mind buying higher. That don't bother me whatsoever. Walmart, Microsoft are two. Bitcoin and crypto. Nothing in Bitcoin and crypto. Covered call ETFs. Call ETFs. DJIA, QQQY, JEPI, and NUSI. Oh, I'm going to look at SOFI for you. Because I do think, I think SOFI, it's held up through all of the, hey, we're waiving student tuition payments. It is still expensive. It is super expensive. But leveraged ETFs, SVXY, hold on, DRV, TBT, UDAO. Hold on 1 second. Let's bring the other bed in. She's getting pissed because Penny is. You got it? Dogs are crying. By the way, I will be on today at noon on Zoom for paid newsletter subscribers. Arch is one. GCT, is that Giga Cloud? That was up like 10% yesterday. When I said, I don't know about this one. And then it's up like 10%. VIG. ETFs. VIG. Let's go to spider sectors. Oh, 2. XLV and XLG. XLG, good one. I like XLG. I got to buy more XLG in my account. I have it in my parents' account. I think we have quite a lot of that in my parents' account. ANET, I think, is a good one. I just haven't gotten into that one because Duolingo. That's a Brad stock. And then this is an Alpha Pick stock. An Alpha Pick stock. Look at this. I mean, this is an Alpha Pick stock that is getting ready. I mean, if that's not capitulating, I don't know what is. 139 is the high. This is MI Homes. MACD, kind of just there. I mean, outside of its catalysts, hasn't reacted well to the earnings. I see them going down from 482 to 366. So I'd have to do a little bit more. But that's, hey, Alpha Picks. Let's see my not owned list. I still don't share the not owned list. It's a big list, but Marriott's going. Zoom. I can put Zoom in here. Because I'm now a paying customer of Zoom. PDD. Let's go to the Dow. Dow 30. Oh, Visa. J&J. IBM. Old tech is new tech. Let me look at NASDAQ. Oh, Align. Versk. Intuit during tax time. PayX. Starbucks. Marriott. That's on my watch list. I just looked at that one. Okay, now let's go to the S&P. Okay, all of those are already on the list. Let's go back to the strategy tester. Okay. Zoom video getting ready to plummet up. Look at that. I mean, look at this one. It's been putting in a nice base. I like it, but okay, let's look at SOFI. I switched to raindrop candles, by the way. In fact, I'll go over a little bit. If my charts look a little different, that's why I switched to raindrop candles. And raindrop candles, I don't know if these are bars right now. But the raindrop candles, actually, I think I need to switch down here for it to actually show. I don't think it changes. Let me see. Raindrop, generic. Yeah, it does change. I guess it does change. We'll do candles. I don't know why it would change. But the performance chart does change. Let me see. Why does it change? Let's see. 819 right there. 820. Oh. I think it's the calculation from the raindrop. I'm going to do candles. That doesn't change, but the raindrop does. It's the calculation. Interesting. I think you'll like Nantucket, Zephin. I think you're going to love it. Algorithm has you out as of the 5th. You don't have confirmation. I tend to think that, hey, it's a $10 stock. I still remain convinced. But this will just continue to go to $10. I mean, it's $7.48. I think you can play with this 200-day, to be honest with you. On the 4-hour, I mean, if you don't want to hold out for $10, then play with the 200-day. You can backtest the strategy in Alpha and TrendSpider right here. Just look at when you're trading under the 200-day, buy it. When you're trading over the 200-day, sell it on the 4-hour. Seems like a pretty good strategy because it's been playing with that 200-day a lot. I mean, shit, you're talking since September. This thing has crossed down once, crossed back up once, crossed back up twice, crossed down, crossed back up 3 times, and then just crossed back down. And you got a gap. You got a good gap all the way between 822 and 858. So I think you could, and your MACD's about to cross up, you're probably going to get back in. You won't have confirmation, but I think on this one, you just look at that kind of realm of, hey, how can I play this one effectively? Markets seem to be coming back a little bit, by the way. A little bit. Let's see. TrendSpider pricing and plans. Let's see if this is actually, did they extend it? I don't even know. It is extended. They changed it. So the yearly is the same, but the monthly is, I think, more expensive. Yeah. They went up on the monthly. So there's that one. I want to look at the market data because I want to see what performed yesterday. Day range. XLK closed out at its highs on the day. You're still near 52-week highs. Healthcare, you're near 52-week highs. Not quite at the highs of the days. Consumer staples slipped down. Utilities they're in the middle of the pack and they're 52-week end the day. Consumer discretionary, you're close to your 52-week highs. Industrials at their 52-week highs for the most part. U.S. equities value, still not growth is still going crazy. Momentum going nuts. Near its 52-week. I mean, look at the 52-week highs on the U.S. equities factors. Global equities, look at these 52-week highs. Countries, Brazil, it's close. France, 52-week high. UK, 52-week high. Germany, 52-week high. U.S., 52-week high. Japan, 52-week high. China, it's in the bottom half. I mean, China may be an opportunity here, but again, that housing crisis is just, oh God, it's going to drag that down. Bonds, why the hell are you in bonds? I have no idea why the hell you're in bonds, but commodities, industrial metals, close to the bottom. Gold, why are you in gold? I mean, Steve White said it the best. You had some moron on CNBC in the morning telling you how great gold is as an investment, I just bought Bitcoin. I mean, I had Steve Weiss, an old grumpy dude. He just bought it at all-time highs. Silver, platinum, low. Agriculture, oil is still kind of low. DBO, that is. Natural gas, I mean, we're just at all-time lows on natural gas. It's just not going anywhere. Currencies, yeah. I like this screen. This is great. What's smart beta? I don't even know what smart. Oh, I see. Yes. Equal weighted, momentum, additional factors, large cap, quality, large cap. I mean, just look at 52-week highs. The Russell 2000, you're not at 52-week highs. The Russell 1000, you're at 52-week highs. The broad index, you're close to 52. I mean, you closed down a little bit, but not far from it. S&P 600, 52-week highs. I mean, S&P 400, S&P 500, small cap, 52-week high. I mean, everything's at a high. It's tough. So, let's see if there's anything on the home of FinViz. Insider trading, Flix. Fly exclusive. CCS intelligence. No, I don't care about that. Even though they're selling 466. Nothing crazy. Crude's up 2%. I don't think she's leaving. Nothing nuts. Let's see. European Union passed first global AI regulation. Copper prices pop. I'm going to grab my water. Following solid rally, Wells Fargo cuts Tesla to sell. Yeah, I have that article already. Pentagon said to end plan for $2.5 billion. Intel, I probably should put this one in. Intel's not moving that much on this news. The assumption is that the CHIPS Act is going to pick up the difference. The Commerce Department was initially only supposed to cover $1 billion of the $3.5 billion that Intel is slated to receive from Advanced Defense. The deal is slated to position Intel as the dedicated supplier for processors used for military and intelligence applications that could result in a secure enclave inside the Intel chip factory. Yeah. I think the CHIPS Act is going to fund that one. Morning, Mark. Let's look at CELH. I mean, when there's a couple of things to look at here from my past stuff. So, this kind of, I think this was where people started asking me about Celsius, was December. And I said, we're in a range, and you're in the bottom of that range. And you can see we went up and we bounced right off the range. I mean, it was clear we bounced right off the range. We bounced right up on the range. I put this range in. Now, when you broke out of this range, you dipped down a little bit. I would have been worried here. Then the earnings came out and boom, we're off to the races. Right now, you're up 3% in pre-market at 94. CLH. I mean, the PE at 116, their growth is unbelievable. Their forward PE is 58. I mean, that's expensive. Go and look at Monster, MNST. I mean, you can get this for significantly less. Their growth isn't as good. Market cap of $62 billion versus, let's go, CLH, $21 billion. These guys could grow to a $60 billion dollar company, which would 3 times the stock from here. But they'd have to grow more. So, average price target 94, and you're trading at 91. For me, I think there's just better places. I mean, is anybody... These guys are pretty pissed that they sold at 67 when you're trading at 91. These guys in January, 10% owner, they were selling $5 million worth. So I can't listen. I'm not going to argue that it's a bad bet. For me, I'm just a douche on the internet. I don't know anything more than you guys. Let's see. What did I put in here? Okay. I get taken care of. Whoop, whoop. I asked for water, and based on the delay, I get water a little bit later. Thank you. I know she's listening. Splits are good catalysts. That's why I'm saying I think SMCI is worth the risk of the downside, because I do think there's a split coming on that one. I think they'll announce a split. It does nothing for the actual valuation of the company, but I think it will work. Let me open up these links now, and then I'm going to get started, because I am going on at noontime today. Wells Fargo cutting Tesla. I did really like Herb Greenberg. This story on solar, it lays it out so perfectly with Sedge and Enphase. Qualcomm with their new Snapdragon flagship. Snowflake, I am buying the dip on Snowflake. I have been buying the dip on Snowflake. I just have not put that out there, but I am. Supermicro, God, it's just so good. Oracle, strength buoys all the AI stocks. Eli Lilly partners with Amazon. Raindrop candles. What are raindrop candles? Just look at this candlestick pattern, okay? These are raindrop candles in Transpire. If you haven't tried them, I would suggest you try them. There's a couple of customized things that they do with blue dojis and things of that sort. It really outlines. I went over some volume-weighted stuff, and you can see. So this is bullish. It's a bullish candle. The VWAP on the first half of the period is down below the VWAP on the second half of the period. Neutral, kind of the VWAP's the same. And you can see by the volume is displayed on the left-hand side. It's the first half of the whatever period that you're in. So if it's a 5-minute raindrop candle, it's the first 2.5 minutes. The left-hand side, the right-hand side is the second 2.5 minutes. So you can see right on there clearly where the volume is really going. So I really like raindrop patterns. Advantage of raindrop patterns, bottom line, it's really, really good. So I switched to it. I've used them in the past. I kind of announced yesterday on Twitter, I think, or something, that I was switching to them. I'm not switching to them on my algorithm, because there's a calculation that I may have forgotten about. So, and let me move this one up here. Okay. I'm going to do that first. Okay, let's go to the Qs. And then I'm going to start. Man, those Europeans with their cigarettes, they're going to go big on Celsius. I play a game with some of my friends. Was that wrong? Was that wrong to say? It kind of came out of my mouth, but was that wrong? Oxy's up 1%. I haven't looked at Devon lately. Hold on. I still own Devon. I need to get out and raise some funds. I don't want to sell Devon into strength. I mean, their dividend's coming up, good dividend, but your RSI is just so high at 71. At some point, this thing turns over. And I think you're in that range between 40 and 45. So 46 might not be a bad place to sell Devon. But we'll look at that one in a little bit. I'll look at that one later when I'm going over my personal portfolio. Okay. If you are not subscribed, let me get my newsletter up. Why do I do this? There's the newsletter. Okay. Yeah, I bought down in the 40s. I think hold on, I'll tell you if I'm positive. I don't want to lie to you. Alex, if you are here, I will email you back with some stuff. Okay. Let me look at Devon real quick. Because I think my average purchase price is closer to 47, 46. In that neighborhood. Morning, Pavan. Let's see. Devon. Average purchase, it's even worse. 49.68. So I'm down 6%. Here's the thing. I've gotten rid of enough and I didn't trade a ton of this. So it's only $10,000. So I'm down $600. I'm down 6%. That's not horrible for me. But BLDR, I'm up to 8%. Broadcom, I'm down 7%. That was DocuSign, I'm down 5%. But I do believe that one has 70 in it. Alex, you're here. Okay. I will text you. I will message you back. Alex, by the way, one of the things you can do, I'll bring this up. Go to TrendSpider's YouTube right now and just notify you in 100 minutes at 11 a.m. Jason is going to be on. It's office hours. Literally, I will tell you, anybody that subscribes to me that is a TrendSpider subscriber that is listening, use office hours. You're crazy if you don't. Jason is a master at TrendSpider. He will do a live, hey, can you help me do this strategy? Boom. He'll write it for you. As long as he's got time and stuff, he might say, hey, text me afterwards, on Twitter. Follow me on, get me on Twitter and I'll help you out with this. There is no dumb question in office hours. Understand, I have asked so many stupid questions in office hours, and Jason still is my friend. There is nobody dumber than me on TrendSpider. Yes, you guys think I'm a master at this. I use my algorithm. I use the 5-minute charts. I use the moving averages. I use the MACD. I use the basic stuff. I don't use unusual options. I don't use the insiders stuff. I don't use smart checklists. I don't use a ton of seasonality. I don't use the analysis portion. I don't use the smart assistant enough. I just don't. And so, when you guys buy through me, the benefit that you get is you get everything that I use. Yeah, Chris is on there a lot with me too. Morning, Mike. And yeah, I mean, I can't tell you how much TrendSpider has that I don't use. But what's nice is when you order through me, you get that plug and play. You get my 4-hour algorithm. You get all of the watch lists that I use. You get everything. And yeah, Chris is a huge fan of smart checklists. And I'm starting to get there as well, because what's nice about smart checklists is you can set it up. Basically, I don't want to add it to my sidebar. I won't, because I don't want to screw up my view right now. But smart checklist is, say I want to look at a chart, and rather than scan, I just want to go quickly through and say, okay, it's above the 200 or below the 200 SMA, above the 50, and the 50 days moving positive. And I just quickly want to look at some stocks that have that. Smart checklist. I mean, it's unbelievable when you're looking for opportunities and stuff. I talk a lot about seeking alpha being a time saver. In my mind, I think I could optimize TrendSpider to be an even better time saver if I spent the time. And the part of the problem that I think a lot of people, and it was what I was talking to Zephan about, TrendSpider is as good as the time that you put into it. If you want to put into just minimal time, you're not going to get much out of it. If you want to put enough time into this, it can be. I'm doing this about, I'd say 2 hours a day to manage stuff, but I'm obsessing. So, I do a freaking hour-long podcast for people every day. So 2 hours a day isn't that horrible just on TrendSpider. Then you put in another couple hours a day on seeking alpha, looking at stuff. Then you put in a couple hours a day of managing my portfolio, writing a newsletter, managing Savvy Trader. I mean, it just all adds up. So, I would say for the first 2 to 3 weeks of using TrendSpider, minimum an hour a day, understanding it, finding something new, and looking at it. It's overwhelming. You just got to break it down into small chunks so that it's not. Yeah. The trading bots are great if you have a strategy. And their Discord is great too, because people share strategies and stuff in there. So, okay. Let me hit record, and I'm going to start this mofo. Do I have anything in the trash? No. Okay. Okay. Hopefully this doesn't screw up. Good morning. It is Hump Day, Wednesday, March 13th. A couple of news items. Thank you to everybody who's reached out about TrendSpider. I will get back to you. There were a couple of people that I got back to this morning. If you ordered TrendSpider through the links, I will get back to you. Just so everyone is aware, TrendSpider is, let me see, where is it? TrendSpider will go, yeah, here we go. TrendSpider, they extended this, but I think they upped the monthly price. So if you want the yearly, it's still $595. I think that's the same as it was yesterday. It's 67% off. TrendSpider, as we go through this, you'll see it's my 4-hour algorithm on my watch list. Everything that I get, I send to you in a welcome letter. You use the link tree to sign up, linktr.ee. It's down below /daily stock pick. It's this top link. But the process is you go over here to the link tree, you sign up using that top link. You sign up, and then you just email me. And the email's found here on Linktree as well. It's dailystockpick3@gmail.com. And so once you email me, I get back to you with a welcome letter. So let's look at the Qs. Where we were up yesterday. Yesterday was a rally. It was unheard of. I don't understand what in the hell the market was thinking. Everybody that I read yesterday was like, hey, inflation's up. Here's the market. Hold my beer. And it takes off. Makes no sense whatsoever. So what you want to do is you want to, find your opportunities. I put out a newsletter yesterday, finding opportunities. There's plenty of opportunities. The newsletter is absolutely 100% free. The weekend is paid. But I will have the additional benefit of being a paid member is I have Zoom meetings, and there is one today at 12 noon Eastern time. Hop on Zoom. It's completely interactive. I let you open up your camera. I let you open up your microphone. You can chat with me if you're a little bit shy. Whatever you want. That's it. I'm there for you. The other thing I want to let you know about is if you signed up for TrendSpider, Jason is having an office hours session today at 11 a.m. So you can hop on Jason's office hours at 11 a.m. and then hop on my Zoom meeting at 12. Simple as that. Jason is a master. If you are new, I got a couple of messages from people that say they are overwhelmed with TrendSpider. You got to break it up into chunks. It's overwhelming. I will say it is overwhelming. The benefit of signing up through me is you get your the 4-hour algorithm. It's plug and play. You import it. So I send you a welcome letter with links. And you import it. You set up your design here. I do have a newsletter, by the way, that has all of my setup in it, and I include it in the welcome letter. It is a guide. There's a free 7-day trial on this. So if you want to use my setup, you can go down here to the paid one. My setup on TrendSpider, it's a 2-part series. Part 1 shows you all of the moving averages that I do and the MACD and RSI. Part 2 shows you everything that I use. You can set up your screen the way that I do. I explain. I send you videos as to why I've chosen these indicators, moving averages and such. So it's a one-and-all package kind of thing. It is overwhelming. Take your time. It's not going to make sense. It's not. For somebody who hasn't done charting before, it's not something that's super, super simple. But office hours today with Jason at 11, my live at 12. Look at what happened 4 years ago. 4 years ago, this was the market. Who remembers this? My portfolio was down about 40%, 43%. This was where I started using the algorithm. The idea came. I don't think I got TrendSpider until June or July of 2020 when we really wanted to do it. And then I don't think we developed the algorithm until September, November, and we kind of customized it into 2021. So, yeah, I mean, this is what the TrendSpider is. It's not only going to allow you to make money on the way up, but because you see button hooks, because you can see when the market turns down, it's going to save you on the way down. And that's the way you have to look at that expense for TrendSpider, the expense for Seeking Alpha, the expense for any of this. You have to look at, okay, am I making more money as a whole? Am I growing my net worth? Because if that's the case, you're doing well. If you're not, you have to look at your system and look at things a little differently. Don't listen to me on Bitcoin, by the way. Listen to Tom Lee. Tom Lee has been more right than wrong. He's calling for it to go to $150,000. I think he said $100,000 by the end of the year. Mike Alfred says, we've just arrived at the beginning of a new bull market. I'm already seeing influencers shamelessly encouraging their followers to sell Bitcoin and sell Bitcoin proxies. This is abhorrent behavior that will cost their followers many tens of millions, hundreds of millions of future value. Do not sell your Bitcoin. People ask me about Mara. People ask me about the Bitcoin ETFs. I have a watch list of Bitcoin ETFs. You can do those. You can track those in Seeking Alpha, like I did a few days ago. Not all Bitcoin ETFs are trading the same. They're trading differently. So make sure you understand where yours is trading, how much market cap yours has, how much inflows yours has, how much Bitcoin they hold. Make sure you own that. And if you don't know all of that, just buy Bitcoin. And if you're just going to buy it, forget it. Do not buy an ETF. Trade your ETF. These are huge, huge costs that come along with owning these ETFs. Just own the Bitcoin. Your coins, your codes, your coins, whatever that saying is. Make sure that you own the actual the security features of that. Seeking Alpha is so good. Seeking Alpha Premium, you get $50 off Seeking Alpha Premium if you use the link on my link tree. It is the second link right here. Get Seeking Alpha for $50 off. This is part of their app, and it tells me this every morning. Here's tech and communication stocks, largest quant strong buys. MANH. Market just opened up, and we should be up. MANH. This is Manhattan Associates. Look at this one. We don't have confirmation, but it's made its move higher. Your MACD has come down, but the stock price hasn't come down. You made that huge move down here. You just traded sideways. This one's getting ready to take off again. I really like this. We can look at Splunk. Zoom. Zoom has a cross up today or yesterday. I'm not sure which one it had. Let's see. In the algorithm. It is today. It's up there. Zoom in pre-market, you're at 69. You're down 0.09. This one, you're currently in this nice little run post earnings. The MACD's come down. Your RSI is at 60. It's a little overbought, but I do think you have probably 70, 74 in this one. So understand, this is how I use Seeking Alpha. I love the app. Sitting in bed and looking. Guess SMCI, Dell, AppLovin, Arista Networks, Google, DocuSign. Strong quant buys. I like the quant. Apple. Let's talk about Apple. I put out a newsletter yesterday that Apple was, I thought, one of the best buys in the market. I think I bought it at $173.50. So I'm in the red right now. I'm not worried about it. This is a long-term buy. I bought a ton. And when I say I bought a ton, it wasn't in my portfolio. It was in my parents' portfolio. I bought a ton of Apple. I put it on a Savvy Trader. If you're not following me on Savvy Trader, I've got two portfolios. I've got a core stock pick portfolio and a trading portfolio. The trading portfolio, I think it's number one in like the year-to-date, month-to-date, 3-month or something. It's quite crazy. It's SMCI, it's NVIDIA, it's stuff like that I've been trading in and out of. The daily stock pick portfolio, it's free to subscribe to. Not only did I buy a ton of Apple yesterday, I bought a ton of XLK. And XLK, I added it to the core portfolio. It needs to be part of the core portfolio. I bought it around 211, 212, somewhere in that neighborhood. I'm buying at all-time highs. It makes no sense to buy at this point in time, but long-term. It's just long-term. And if you have a better ETF that outperforms XLK in the large tech sector, let me know, because I'd like to know about it, because right now XLK is the best one that I've found with the fees associated with it. It's the best return that I could find. So, but I did buy Apple. I put in more XLK into my account. Cisco. I wanted to bring up Cisco because I said on their last earnings that I thought it was a $50 stock and it would cross 50. Well, it crossed 50 yesterday. You're kind of using that 200-day as a resistance factor. You kind of came down here. I said after earnings, buy it at 47. I didn't think it was this slide down here was worth it. Algorithm got you in at 49. Bit late. You kind of came down here to 48. But it's a $50 stock. I said when it was under 50, I think it's a $50 stock. I still think it's a $50 stock. You're seeing a little resistance right there on the 200-day. I think you could get back up here to 53 or 54. Old tech is kind of going a little crazy. 3M went nuts yesterday. And you know why? The CEO is leaving. So the douchebag that's run this company is leaving. That's news that was good to the market. 3M, I wouldn't buy 3M. I still think there's structural problems. It's up another 2%. The reason I wanted to bring it up, there's a gap here to 107. I don't know that you cover that gap. I don't know enough about this company to say, yes, it's getting back to 107. But I can tell you it's probably going to get back there. 110 is kind of the resistance area up here. You could hit 110 and then bounce down. But that's a nice 10% move right there. So keep an eye on that one. Let's see. I switched my TrendSpider to raindrop candles yesterday. And part of the reason I switched my TrendSpider to raindrop candles, if you have TrendSpider, you should try the raindrop candles. I tell the people this. This is volume weighted average price. I wrote a newsletter about volume weighted average price. Buy the dip, finding opportunities in this market. Trading with VWAP, volume weighted average price. And SMC as an example. What do the raindrop candles tell you? Well, the first half of the period is on the left. It tells you the VWAP of the first half of the period. The second half of the period is on the right-hand side, and it tells you that. Raindrop candles show you, they're kind of like candlesticks, but they show you the actual volume and the VWAP price. I love raindrop candles. I think they perform very well. Just be aware, my algorithm, if you change it to raindrop candles, the actual calculation changes. So be aware of that. Keep an eye on that. Just understand that I think it's like Heiken Ashi. When you change to Heiken Ashi candles, the calculation changes. But I wanted to tell everybody that I did that. Eli Lilly flew yesterday, and part of it was announced this morning. Maybe somebody knew about this, but Eli Lilly in pact with Amazon to deliver Zepbound and other medicines. This is the weight loss drug. And Lilly was up like 2% yesterday. It's down 0.42%. You could have gotten this in the low 700s. Down here, 730. I still think you buy this at 750. I think we're seeing that turnover. Algorithm got you out with a 26% gain. I think you wait for some confirmation, but don't wait too long. You're putting in a volume shelf up here. So between 730 and 750, you can grab this one. This is, again, we're in a GLP-1 and an AI market. So those are the two things that you really want to look at. Amazon was up 2% yesterday. This is a $180 stock. You're at 176. Buy it. That's the all-time high at 188 right there. You're going back there. So Costco was up 3%. Did you get Costco? It's down 0.68%. Did you get Costco down here at 718? I didn't add to it. I do this podcast too much. I don't get the chance of buying in the morning, but it's at 731. I need to add this one to my portfolio. This was a great one. Meta was up over 500, up 3% yesterday. It's back under 500. Buy it under 500. Just buy it under 500. Netflix, they still have, they were up 3%. It's kind of just hovering between positive and negative right now. But Netflix yesterday, huge, it's at 610. Just buy it. It's a $700-800 stock. Just buy it. NVIDIA was up 5%. And I want to discuss this one. Oracle and others. Oracle, Strength, Buoys, AI stocks ahead of NVIDIA GTC. There is a NVIDIA event happening. I think it's March. Let's see. Unveiling is slated to occur on March 18th. Qualcomm added. That's the Qualcomm. NVIDIA is to host the GTC on March 18th. Yeah. March 18th, which is 5 days away? NVIDIA is probably going to get a pop. Buy it under 900. I'll probably be buying this one under 900 today. It's down a little bit today. Buy it under 900. I think that's, again, I think we're putting in. I know I've said, hey, there's this weakness here. The weakness, we had bad inflation numbers yesterday. This thing barely moved. Barely moved. The algorithm still has you in at 515. Hasn't gotten you out. The algorithm's solid. Yes, the MACD's high. Just buy it. One that is going nuts and should be watched. And I don't think the algorithm has gotten you out on this one either during this run. It did. It got you out with an 89% gain, and then the next candle gets you right back in. This is NVDA. This is a 2 times long daily NVIDIA. This isn't one that you hold for a long time. And I say that fully well knowing that here in January, you are up 163%. Okay, 163%. If we go to NVIDIA and we look at that same time frame, because the algorithm kind of got you in at about the same time, and we look at the same time frame, 168 in that one is 71% here. It's almost double. And I fully well know that you can make more by just sitting in this one and holding it. But do not. It moves too quickly. I would rather see you trade. The algorithm on this one makes you 493%. Buying and holding over 15 months makes you 853%. It is crazy. But I also have a 65-minute algorithm, which trades on the 8-day EMA. This one's a lot safer. Got you in at 41.24 here. Go and trade this one at 41.50 because you're still in this one. You have confirmation. The MACD is super low. The RSI is at 50. Go and trade it. But trade it on a shorter time frame. Do not trade this on a daily. Do not trade this on a weekly. NVDL is meant to trade on a short time frame. But read this article about Oracle and how it's buoyed. I think Oracle's still a buy as well. I think Oracle, even though it's up here at 128, I think. Let's see. Has it pulled back? You do have to wait to buy Oracle because they just announced earnings, 126. It's kind of putting in that film right there. If you can get it at 124, I think you're fine at 124. I think you're fine at 126, to be honest. They're just the beneficiaries. Dell is one that's gonna be a good one for AI as well. SMCI was up 7% yesterday. Supermicro, this is a great article. Was added as a new long idea by Hedgeye, Felix Wang, due to the company's role in artificial intelligence revolution. Shares finished up more than 7%. Supermicro's biggest power up is its close collaboration with NVIDIA, specifically to build AI GPU-based servers. NVIDIA rose more than 7%. San Jose-based Supermicro was on a tear before the rapid rise of AI. SMCI, I want to get back into this one. It's down 1.78%. I want to get into it under $1,100. It's at $1,140. I want to get in. I am not afraid to buy this at $1,200 if we take off. So far, you still have confirmation. So far, it's still good. I sold at $1,100. I want to get back in. This isn't something that's done. It's not something that's over. The other portion of there's a couple of other AI moves that you can make in legacy tech, and that's Dell. Right now, Dell, you can see it after its earnings, it was up here at 125. It started to pull back. It's starting to fill this gap. You're in what? This was, February 29th. You're 13 days away from their earnings right now, and you haven't seen it move positive. So there's no reason to buy it right now. Wait until this one starts to move a little more positive. But I do think that Dell is poised to do it. IBM is another. IBM is another one that you could buy. IBM, solid tech player. I mean, look at this one, 187, and you're at 196. You have confirmation. MACD isn't super stretched. The RSI isn't super out there. This is a solid performer. I wouldn't suggest trading it. I think if you want IBM, you just buy it. There's news today that they're going to lay off a bunch of sales staff. So that's not a bad thing. Taiwan Semi, TSM in the core portfolio. This one's down 1.68%. You're seeing some choppiness, but what this tells you is it's got 155 in the tank. It's got 155 in the tank, so you're buying at 141. Not bad. You're bouncing up here against levels at about 141. It pierced this level, couldn't hold it. It's pulled back. Old support turns into new resistance. The old resistance right here turns into new support. So your support's at 111. Simple as that. Walmart was way up yesterday. Walmart was up almost 2% yesterday. Walmart's down 0.61. Buy it under 60. I'm telling you, under 60 is a good buy on this one. Have patience. Under 60 is a good one. You know what was way up yesterday, and I think it's up again today? SOUN, SoundHound AI. Let's see, is this one? This one's plus 6.3% today. Yeah, it's going. It's moving. Is it not all-time high? I don't know. Let's look at the weekly on this one. No, it's not at all-time. All-time highs are up here, but it looks like about 10. Looks like, $10.80 on its initial public offering. So, yeah, 738. It's got confirmation. I mean, I don't know that I'm necessarily getting in there, but it's a good one. ANET is another one. This is Arista Networks. I like this company. I really want to get into this. The algorithm has you out. Nice 1% gain, but it has you out. It's going to get you back in. At this one, 279, I'll probably add it to it. I just haven't. You guys will know when I add to stuff, but I always say I want to add to it, and I do. I really do. Another X-Core daily stock pick core portfolio one that I've been adding to, Snowflake. Snowflake got you out on this one. Hasn't gotten you back in the algorithm. It's about to. It's putting in this floor at 162. When it's at 145, you better load up on this one. But at 162, I would start buying. I'm not saying that it may not have more downside. Those Bollinger Bands are cinching up. They're getting ready to go. I'm not sure which direction. In fact, yesterday I posted this from TrendSpider. Snowflake has fallen over 30% in just 2 weeks. Is this another opportunity to catch a higher low on the weekly? Is this the higher low? Again, higher low back here, higher low back here, higher low back here. You look at the weekly. This is the 4 hour right now. If we look at this weekly, you'll see that. I mean, yeah, look at that trading range that I've identified. Higher, again, higher low, higher low, higher low, higher low. Is this another one to find the higher low? Trading range is simple. You just got to buy it in between 125 and 200. Sell it when it gets to 200. I like that one. I like that one a lot. Qualcomm, core portfolio stock. In focus is the company teases new Snapdragon flagship on social media. Qualcomm's in the core portfolio. This is a solid chip stock. It's not NVIDIA. It's not AMD. But this is a solid. Algorithm makes you 1% over 2 years. You know what buying and holding makes you? 20%. The algorithm has you in at 148. Boy, that was a great buy. This one, when the algorithm tells you it's only making 1% over 2 years, but the actual stock is making 20%, in my mind, I want to identify, is that company a good company? Because if the company's a good company, then I really want to look for good quality entry points. Now, 148, good quality entry point. Because you know why? If we go to this weekly and we look at this one, 130 was the 200-day. And you're about to get a golden cross-up. You know, when was the last time you traded under the 200-day on the weekly? It was way back here in 2019. Briefly during the March 2020, and then you had 2022, which brought you down completely too low. This is a great company, a great chip company. I read a story by Herb Greenberg yesterday on Substack. I do subscribe to his newsletter. His newsletter is great. He put in this story. If you've ever invested in Enphase, Sedge, or Tesla, go and tune into this. Go and read this news article. I will include it in the newsletter. It is basically, it's about how solar storm intensifies. He's raising red flags about SolarEdge, about Enphase, and about Tesla. But he says Tesla could disrupt this market, but make no mistake about it. This is not a bullish Tesla story. He basically says, and I can't find it in here right now, Tesla's Powerwall 3 is their newest battery. It is going to be a game changer. It's huge, but it represents less than 1% of Tesla. So this is not a bullish Tesla story. This is just, hey, SolarEdge and Enphase, we may be seeing bad things in the future. That's what he's pointing out. That's what he's pointing. He's not pointing to, hey, oh my God, go run into Tesla. Do not run into Tesla. Tesla is still a tough sell. They've got some major some issues. I just bought a Tesla. I think it's cheaper now. A couple of weeks later, I think it's cheaper now. Do I care? No. I mean, I really don't. But, again, that's the nudge on Tesla is they've been selling these cars at very large margins. They have pricing power. But as people get, out of EVs and more into hybrids, this one may get hurt. It may get hurt. Not everyone wants a Tesla. So understand that is not a bullish story for Tesla on solar. It is just an observation. Wells Fargo, in fact, cut Tesla to a sell. Moved their price target to 125 from 200, just based on valuation. You can read that article. It's at 174 now. 125 would push this one back to, God, I don't even know where. 125 is right here. That would push it back to 2022, where it's at 120. I mean, that would be where you would load up on this. Honestly, that was a fair valuation in my mind. The volume shelf at 250 is still there. People are still holding on to this. If we pull this back to the all-time highs, these are the all-time highs right here in November 2021. The valuation on this one, it's still there. The volume shelf at 265, it's still there. There's still people holding on at 265. Right now, you're starting to build this volume shelf out here at 160. There is no volume shelf down here. So as you go lower, look out below. There's nobody to sell. So your buyers are going to have to start coming in, but buyers aren't showing up. So be very, very careful of Tesla. Super careful, in fact. Intel, I bought about $25,000 worth of Intel before earnings. Bad call. Pentagon said they plan to not pay $2.5 billion towards the Intel grant. That is not moving the stock a ton. And the reason it's not moving the stock a ton is down 1.67, 1%. 1%. It's down 1% today. You've got this range here. And the reason it's not moving the needle a ton is because it's assuming that the CHIPS Act is going to pick up that amount. That's all it is. So there's that. Let's look at earnings. Dollar Tree came in with light earnings. They missed. They were down 10%. Let's see. They're down 13% now that the market opened. You can see that candle way down here. It's on the downside of it. Dollar Tree. I mean, it points out, I think people are shopping at Costco. I think people are shopping at Walmart. And I think people are shopping at Target. People aren't shopping at Dollar Tree right now. It's just not. There's two earnings later today. There's Path, which is UiPath. We'll take a look at Path real quick. I got a bunch of questions yesterday. Am I buying UiPath? Guys, when I buy, you'll know. And one thing that I don't want you to do is I don't want you to follow me. The only reason I present this podcast with stuff that I buy is for the reasons as I lay out the reasons. If you agree with the reasons, go. The reason I lay out if I buy earnings and stuff, I mean, I lay out that I bought DocuSign around payment stuff. There are plenty of losers that I've had. I've had Sedge, where I've lost. So I don't want you following me in. I do post my trades on Savvy Trader. The reason is because I have subscribers over there who want to follow. So I feel the need to do it. It makes me super uncomfortable, but if I buy, I will tell you. I don't want you to follow me in trades. So typically I'll, just kind of announce it after I buy it. I'm not telling you before. I tell you when I want to buy something and because I think the story makes sense, then I make that determination. But it should be a personal decision. So, part of the podcast is do your own research. AIPath is in a positive trend. I mean, right now it is up 0.04%. So it's just kind of fluttery. Has positive, confirmation up there. There's a gap up here at 26. UiPath, let's go over to Seeking Alpha and look at it. Let's go to FinViz first. I'll look at FinViz. Since FinViz is free for everybody to look at, they're not making money. They're losing $151 million. They have plenty of cash on hand. Do not worry about them. With cash on hand, they got billions of dollars of cash on hand. Forward PE 47. It's expensive. Up year to date, 1.13. Technology software stock. Average target price is $24.76. They just got an initiation. No target price. Take that price target with a grain of salt. Because, look, everybody's selling. They're selling at 22 and they're selling, CFO selling a bunch. He's putting a pool in his backyard. I mean, see, chief legal officer selling $256,000 to you and me. That's a ton of money to these guys. It's kind of buying a car. I got to pay taxes. That's my tax money right there. He sold $2 million last year. I mean, again, insider buying. But UiPath on here, so a buy on Wall Street. The valuation is where it gets a D. It's 23 out of a 46 in information technology. If we go over to the Wall Street portion and we look at this, there's 23 analysts that cover it. 13 say hold. So, again, take that price target at 25 with a grain of salt. The low is 17. It hangs on to its price target pretty well. It doesn't seem to be crazy. I don't know. Am I buying it? I mean, I don't know. I don't think so. I mean, I might regret that, but I don't think so. They're losing money. I want companies that make money. Sentinel-1, This is one that's losing money as well. I think, let's see. Hold on one second. Okay, I'm going to be right back.
NVIDIA 889.
What is it?
NVIDIA 889.
Yeah. I'm going to buy it under 900. Oh. Sorry. Okay. Okay is here. Okay is listening. Let me look at. I forget where I laid on set. Oh, Sentinel One. Okay, we'll look at those earnings. Do you have alerts set for your algorithm on when a stock says to buy or sell? Yes. Steven, if I'm looking at a stock and I'm seriously looking to buy it, I set an alert. I don't want to look at stock. I don't want to look at charts all day. I don't automate my trades, but I use alerts. SMH in your scans a couple months ago, I bought it and it's been flying. Yeah, SMH is just, semiconductors. What do you think about NVDL with 1 week time frame? I think you're fine. I mean, Pavan, if I knew exactly where NVDL was going to wind up with a 1 week, you don't think my ass would be taking hundreds of $1,000s in cash and just throwing it in there? I think you'll be fine. But the risk reward, I mean, it's going to move twice what NVIDIA does. Maybe NVIDIA comes out, some analyst comes out and says, we're seeing the wait time for NVIDIA chips come from 3 months down to 2 months. Well, shit, that's going to, that'll kill the stock right there. So, okay. Sorry, I got off here. Okay, let me do Sentinel-1. Sorry, I had to take a break. Sentinel-1, let's look at this one. This one's heading into earnings. It's okay. I mean, I don't think that they're making money, but let's look weekly. I mean, you don't even have a 200-day on this one. Sentinel-1, we'll take a look at FinViz to see. They're losing money. It's cybersecurity. So, performance year-to-date 0.33. I don't have enough information about, whether this one's going to surprise or not. This would be a total bet. I'm seeing everyone selling around 27.09. You're just kind of there. This guy sold, a few million dollars at 30. I mean, that's a nice 10% move from where you are now. What do I see it as here? Let's see. Sentinel-1. I've got a dog crying and I'm ignoring her. Let's see. Wall Street says buy. $29 price target. I think you take that price target with a grain of salt, but let me just check here the dates. March 12th, reiterated. $31 Needham. I mean, that's March 12th. That was yesterday. It got a price change from 28 to 31 from Needham. Average price target, 29. This one looks like it could, again, the profitability is what kills it. If we go and look at the profitability, you can see the margin sucks. They're losing 68%. That the return on capital sucks. It's that they're not making money. And the valuation is crazy. We can look at the PE over here. Forward PE is 436. 436. So, I mean, is it worth it? I don't know. I mean, this doesn't make me feel as comfortable as Apple does. So, as far as earnings go, maybe I do something. Tomorrow, we've got a couple of earnings too. And these I'm much more able to talk about. Adobe, I'm positive on. I mean, it's dipped here. It's under its 200-day. Adobe with its AI. The only problem with Adobe is the valuation. This is tomorrow. It's gotten a nice bounce from 564 to 579. You're going to use that 200-day as resistance. I can guarantee you that it's going to bounce. It bounced off there today. You're at 579. The 200 days at 587. If we go and we look at Adobe here, they're making money. Their PE is 49. The forward PE is only 28. Year to date, it's down 2%. I mean, again, this is the leader in AI as far as I can tell from an image standpoint. If we go and look at Adobe here, we can see it's a buy. The valuation is what's killing it. If we go to Wall Street, the average price target is 645. You're trading at 578. If we look at some of the price targets here, downgrade January 18th, 499. So is this in downward mode? Maybe. But the lowest is 465. Again, you're trading at 578. 645 is the average. Look at the way it's traded to its price target. I mean, it's always been below it. It hasn't been above it. But that's a pretty big range of 11% right now. And does their Creative Cloud, does this help this company? I don't know. I mean, this could be a good one. The other one that's reporting is one that I personally own, Ulta Beauty. They got a shout out in targets. their earnings that they were doing well. You're seeing a cross up, got you out with a 13% gain. I did not sell on that 13% gain, but the MACD's crossing up again. You're going to get in right before earnings tomorrow. It's going to get you in probably on this candle or the next, the afternoon candle at around 560. We can look at Ulta here. Before I get off the charts, I'm going to look at a weekly just to see where we are on the long-term time frame. You're seeing, right, you got a double top here, but if you do the trend line, then you're down below the trend. This was a clear and present, like just buy it here at 383 in October 2023. October of last year, just go ahead and buy it at 380. You're at 560 right now. That's where you were in April when it was flying high. Yes, ELF is a better buy. But this trend, you're on the lower portion of this trend. I'm waiting to get to the higher portion, and I do think you get to the higher portion. The question is, do you double top out here? If you double top out here, that is the danger of this one. From an Ulta standpoint, the PE is 22. The forward PE is 20. This is way cheaper than ELF. Your average price target, 561. You're trading at 560. So, February 15th, JP Morgan put it up to 600. That would be a nice, almost 10%. I mean, we can look at it, Ulta, from a standpoint of the quant and stuff. It's a hold. From Wall Street analysts, average price target, 555. You're right at your average price target. Most recent price target is up. How does this trade? Doesn't necessarily always trade above its price target. So that's the tough one of this one. Its valuation is a D. We can look at it from an consumer discretionary standpoint. 22, sector median 14, forward 21, sector median 15. I mean, again, the valuation is a D. The profitability, A. Look at those margins, 42%. You're making a lot. So I saw a program on CNBC about theft. And the Ulta CEO was on there saying, yeah, we've been combating theft a lot of late. It's number 6 out of 28 in the specialty stores. I mean, Five Below, Signet Jewelers, Leslie's, ODEP, Dick's Sporting Goods is the top one. So I don't think again, I'm invested in Ulta. I own Ulta. So I'm not buying more. Shep, seems market is good with CPI, VOOG. What's your take? This is the growth. This is Vanguard growth, S&P 500 growth. I think you're fine. I mean, if you want to know VOOG, Shep, go get Seeking Alpha. You want to know VOOG? Just go over here and compare it to your favorite, the peers. I think you're going to see, you're going to see other growth ones. If we look at just total return on this, total return, over 1 year, VOOG up 41%. XLG, 46%. That's what I suggest. You look at 3 years, VOOG, 32%. XLG, which I own, 46%. 5 years, VOOG, 108%. XLG, 120%. XLG is 0.2% expense, but this is the total return. So it's not being taken out of that. It's outperforming even when it's taken out of that. So again, I like VOOG. I think you're fine. I bought XLK. I mean, if you want to, let's edit symbols and we'll take one out and we'll put in XLK. We'll take out this one and we'll just put in XLK. The technology. And we'll look at these. We'll take that out, VOOG. And we'll look at XLK. XLK and XLG. Just look at those two. We'll do total return because, again, you want to include dividends. That's kind of important. You look at this. XLG, 46%. XLK, 54%. That's 1 year. 3 year, you're looking at XLG. VOOG underperforms these two. I mean, it underperforms these two. So 10 year, you look at that. Yeah, it underperforms those two. So which one do you want? I think growth is fine. I think you're fine in growth. William, Gary, I have a system mostly based on free tools and some charting, and I am swing trader. My only reason for not getting TrendSpider is that my system works for now. Am I mistaken? No. No. If you have a system, William, and I try not to push sales too much. My goal to push sales are for those people that don't have a system. If you have a free system that works for you and your portfolio and you're happy with your returns, do not change. Again, if you're beating the market and you have a system that works, do not change. When you want to change, and I think when you want to look at TrendSpider or Seeking Alpha Premium or something of that sort, I think that's when you want to take I wanted to take my money management, my portfolio management to the next level. And I got scared with COVID. I had free tools up until COVID. And when COVID came and I lost 40%, I was 49 years old. It was different in 2007. I was 37 years old. I knew I had time in 2007. There weren't these tools in 2007. The market didn't react like it did in 2007. I knew I could buy. I could constantly just buy and hold a ton in 2007. And I reorganized my portfolio around that pullback. This time in 2020 scared the shit out of me. I mean, honestly, God, it scared the crap out of me. And so I wanted to change things. And so as I went through the summer of 2020, I decided, I have a large enough portfolio. I am now retired because I retired in January of 2020. I think it's time that I start spending money in order to protect my stuff. And the only reason I started spending money was because I went to Fidelity and I went to other brokerage firms and I said, okay, what do you have as far as back testing a strategy? What do you have as far as technical trading tools? What do you have technically that I can look at? Because fundamentally, I was fairly certain that I had enough tools fundamentally to value a stock. I didn't have enough tools technically to value a stock. That's where TrendSpider gets in. If you have enough tools that you're getting results, don't feel like you have to buy it. This is just something that in my mind, it takes the training wheels off and you're able to look at stuff. I don't use bots, and I'm very clear about this. TrendSpider, there are a lot of people who use trading bots once they get comfortable with a strategy. I am not. I just want to make sure that I have an additional reason to buy or sell that has no emotion. When you read an article, you get an emotion. When you look at a chart, there's no emotion. It can tell you exactly what you want to see. Like this one, Vanguard Growth. Right here, am I buying Vanguard Growth? Well, it's on the positive side. It's got some positive candles going on right now. I don't mind buying it. I bought XLK yesterday. I don't mind buying it. Even though we're at all-time highs, I take emotion out of it. I don't mind buying it. When it breaks down, maybe I'm selling it. Or maybe I'm just adding to it, one or the other. But I think over the next year, I'll be more happy than I am upset at these buys. If I were to buy VOG right now at $300, am I upset a year from now if it's at $330? No. Am I upset if it's at $290? No. The VWAP right now is $283. So I don't think that's crazy. But I don't mean to push you into buying stuff. You do not. Wait until the moment when you have a large enough portfolio where you feel like, hey, a 40% pullback would hurt me. And if your system works for you and you feel comfortable managing your portfolio through a 40% pullback without any tools, don't feel like you need to buy it. And I'm not trying to scare you. That is not the security guy coming up to your house and saying, hey, we had some break-ins down the road. That is just somebody who has felt comfortable with this. And my system works for me. I'm not trying to give you my system. I'm trying to help you. So if you have something that works, please don't feel the need to buy something. Use my podcast. Use my podcast with your tools. That's why I make all this stuff for free. I don't provide this stuff for free to try and lure you in to buy stuff. I provide this stuff for free so that you can work it into your system. There are plenty of people who use my podcast to trade options. I do not trade options. I get FOMO and I want to trade options, but I don't trade options. Raphael from Spotify, is NVIDIA too overpriced? No, it's not. Let's go and look at NVIDIA. because what I want to do is I want to compare NVIDIA. We're going to go to peers, and I'm going to compare NVIDIA to AMD. Let's see. We're going to compare it to Taiwan Semi, Broadcom. That's probably a good list, to be honest with you. That's probably a good list that it just pulled up. We're going to pull up total return because I do want to see, because, Qualcomm has some pretty good dividends. Is it too overpriced? Look at this. Employees, I mean, it's got $2.6 trillion. It trounces the market cap of all these. If we go down here, the valuation, it's not crazy. I don't think it's crazy. If we look at PE gap, 37, is that crazy? Outpriced because AMD is 55. Is full year, 2 year, 31? Is that crazy outpriced because AMD is 36? Is the trailing 12 months at 70 crazy? Probably. But forward, 40? Is that crazy? Look at AMD, 101. Look at Broadcom, 59. Taiwan Semi is half that price at 22, but they've some significant political risk. Intel is almost 50% higher than forward. The trailing 12 months. Look at that. Is it overpriced? I don't think so. But this is the caveat, Raphael. You have to understand this is based on their guidance. If their guidance is wrong, this stock is half its price. What's happening is you're coming up. If we look at NVIDIA's chart and we just go on a monthly basis, what stocks do is they compare their earnings to the trailing the last quarter. So this quarter that's coming up here in May of 2024, we're going to go back to May of 2023. Okay, it was this earnings. Look at that candle. That's a 26% weekly candle. That was the start of when NVIDIA started including AI, and it really started pumping. They're going to have year over year in the next quarter comparisons. That's going to be tough when they had a 100% growth last year. Will they have 100% growth this year? Maybe they only grow at 25% because that is a significant growth to overcome the percentage. People will be looking at the percentage. So understand, I don't think that it's overpriced. I just think the comps are going to start hurting this one. The value of this one is there. More for you. Wants me to look at Carvana from Spotify. Carvana, I had such a good experience at Carvana. It's hard for me to talk down about Carvana, but I think they overpaid me for my car. I hope that they get $28,000 for my car. I don't know that they're going to get $28,000, but they gave me $22,000 for my car. Just no questions whatsoever at pickup. They drove it around. They loved it. They saw the ceramic coating. They saw how I took care of it. I do think that I probably could have sold that car for $25,000, but $22,000 to Carvana, I'm happy to give it to them for $22,000. Where's the stock going? I don't know. They're still losing money. This could be a short squeeze. They have a significant short float of 34% shorted. The PE is 105. 105. They don't give forward guidance. They're up 48% year to date. They are up 952% in 1 year. In 1 year. They've given good guidance. I don't know. I had such a good experience. I want to believe in this company. I want to believe that these guys are going to make this work. I just don't know. The cost factor is just crazy. Their growth, it's an F. The valuation, C minus. Everything as it is a hold. I just don't know. Honest for you, more for you. You can take a chance. I think there's better options in the market. That doesn't mean that this doesn't all of a sudden go, look at that, 966%. You're only up 42%. Look at how low it is compared to its 2021 highs at 360. So I don't want to say, oh my God, I had such a good experience. I want to believe in this, but the valuation is crazy. That's it. Scans. We had Walmart cross up. I say get this under 60. Walmart, it's at 61. It's down 0.13. The market's coming back. It has positive momentum. This is just another, I mean, if you bought this at 50 and now you're at 61, kudos to you. I own this one. I like it. I like it a lot. Microsoft had a cross up. I think we're still in a current run. Let's see. Did Microsoft get you in? Yeah, 413. 413 yesterday. So it's trading at 413 today. One from our watch list that Brad Freeman really likes is Duolingo. Duolingo, it's just expensive. Understand, it's expensive. If you bought at 184 back here before earnings, kudos to you. Started trading down on this gap that it created. If you got it at 202, kudos to you. You've got strength. Again, this is you're in at 184. The MACD's kind of come down. It's expensive. An alpha pick that came up was MHO. If you guys want to get into some of the alpha picks, MHO. This one kind of capitulating here in a decent range. I'd say from here, you're talking down there to up here. You're in the middle of this range. Your 50 days movement starting to move positive. Your 200 days still moving positive. This is just another blip on 119. But you have, 140 in this stock back here in December 2023. It's an alpha pick. If you want to get in on alpha picks, by the way, alpha picks is right here. You can it's on the link tree. It's the third one down here. You want to beat the S&P? This is just 2 stocks every month that they give you. Solid analysis. They tell you when to shift to sell, when the new picks are added. It's one of those services. The reason why I like it, look at the performance. I mean, the performance is unbelievable. And I do think the addition of their analysis, I think it's every 2 weeks they give you an analysis a seminar, and they just go over everything. So I like that one. I like this MHO. I've wanted to add this one. This is one of their big winners. Zoom, we went over Zoom, has a cross up. I will be on Zoom at 12 o'clock today. So that's a good one. Visa, J&J, IBM, Align, Veridesk, Intuit, PayX, Starbucks, Marriott, covered call ETFs. We did have a couple of sectors that I want to call out. Spider sectors, XLV had a cross up. This is the healthcare. This is on a run. I mean, you bought in here at 140. This is just another entry point at 147. From a long-term standpoint, with healthcare, you're at all-time highs. I mean, this is a tough one I'm not a big believer in healthcare. Look at how far that's run so fast. I mean, in a sector, you bounced right off that 200-day. And in 4 months, you're up 20%. 20% should be in a sector what you're up in like 2 years. But no, you're up 4 months. So it's hard for me to put that one in. The other one that is in there is one that I went over, XLG. XLG has a cross up. This is the S&P 50. So it's not the S&P 500. This is the S&P 50. It's a point to me that large caps continue to go. They're continuing to run. So I'm gonna, let's see. I want to remove that. Remove this segment annotation. We're going to remove that and we're going to put this in. We're going to say from that $37 mark, this is up 10% in 63 days. So 2 months, 10%. I mean, that's, you look at this one from a all-time high, and yeah, you're at an all-time high. But this is the S&P 50. I think these continue to move. So, again, if you have any questions, you can hit me up. TrendSpider, their sale, it looks like they extended it for another 4 days. I'd get into this. Again, if you're trading, you've seen my algorithm perform over the past couple of days. I've shown you enough charts. I'll show you more in the newsletter. The newsletter for all the newsletter subscribers, if you want to join, the Zoom meeting is down here, bottom left. It is for paid newsletter subscribers. So if you want to pay, I think $20, I'm going to up the price. After today, I'm going to up the price because I've done 2 of these Zooms in a week. And it is a pain in the ass for me to get on Zoom, to be honest with you. But I like interacting with you guys. It's not that I don't like it. It's just it interrupts my day, especially when I do these podcasts. Because right now, I got to run. I got to do the newsletter. I got to put everything out before I do that Zoom. So if you have any questions, hit me up. Okay, take care. Bye. Jay Cesar, Jerry. Ha, Jerry. You're welcome about it. You're not limited on a retirement fund. You can trade in a retirement fund as long as if you have a 401k, you can't trade in it. If you have an IRA, if you have an old 401k and you haven't rolled that out of the 401k and rolled it into an IRA, call your brokerage right now and tell them that you want to roll it into an IRA or a Roth, whatever you want, whatever you decide, and then trade in there. That's nice and simple, Jerry. But if you're in a 401k and you're retired, get the hell out of that 401k. If we're currently working for the company and you can't get your money out, go to HR and ask if there's what's called an interim distribution from your 401k. If they allow you to take an interim distribution, I hate 401ks because I'm not a big fan. They put you in these funds, and the funds are tracking funds for the S&P. Sometimes they have QQQ tracking funds, but most of the time they don't. I lost so much money working in that realm. So I don't like it at all. I don't like them. But Bitcoin, 1K Bitcoin at 53. Yeah, kudos to you. Kudos. I mean, just buy Bitcoin. SMH is a great one. I mean, that's semiconductors. You want to know what's better than SMH? SOXL. Let's see. So this one got you in at 173. You're up 31% in 62 days. Let's look at SOXL. This is a 3-time levered. 3-time levered. Let's see. Remove. And I'm just going to remove them all. Remove all segments. I mean, this one's just a monster. Let's see. That's about the time when the other one got you in January. You're up 71%. So 3 times levered. But yeah, SMH is a good one. SOXX is the one. But Scott, what you should do is go over here and to Alpha Picks, or not to Alpha Picks, to Seeking Alpha, SMH, and just look at the peers. Because the peers will tell you everything that you need to know about SMH, XSD, PSI, and we'll look at total return. 88% over 1 year. It outperforms. Let's throw this up. We're going to get rid of this. Get rid of that. Rid of that. SOXX we'll put up. And we'll put QQQ. I know it's going to outperform QQQ, but I just want to... let's put XLG. Because those are the ones... Okay. SMH has the winner. SMH has the winner. It's because it's heavily weighted towards NVIDIA, I bet. Let's see. Holdings. Boom, boom, boom. NVIDIA, 24%. 26%. They just loaded up on NVIDIA. I mean, the second largest is Taiwan Semi at 10%. So they loaded up on NVIDIA. Let me see. Is this actively managed? Doesn't really say.